Right, well, one top story that we're following, McDonald's signaling layoffs are coming with the temporary closure of all its US offices this week. That's according to the Wall Street Journal. Earlier this year, the company said it would begin layoffs by today. Let's get to a roundup of restaurant news now. Joining us with more, Andrew Charles, Consumer Restaurants Managing Director at TD Cowen. Thank you so much for joining me. So, Andrew, I want to first get your takeaway. I mean, we knew that some of these cuts were going to be coming, but talk about this journey to get here for McDonald's.
Yeah, so thanks for having me today. The biggest takeaway I would say is that this is part of the company. They flagged there'll be an investor day later this year where they'll deliver some news to the street. The two key pieces there are accelerating store development along with finding G&A efficiencies. And so this shouldn't come as a huge surprise. This is likely in the latter camp of finding G&A efficiencies. McDonald's has a larger G&A infrastructure relative to its quick service peers, whether you look at that as G&A as a percent of sales or G&A per store. McDonald's does run heavy versus peers. And so this is an opportunity for them to not only reduce their G&A, but also presumably find some more quicker decision making within the organization, a move not that dissimilar to what Wendy's decided to announce earlier this year as well.
And where could they be putting their investment dollars better to work? We know a lot of companies streamlining here, looking for some efficiency.
I wouldn't say if it's better, where they could put better dollars to work, but certainly digital is something that they are totally focused on. Represents about 25% of the U.S.'s sales and closer to a third when you look at their top 6 markets around the world. And so this is as we know from the restaurant industry, digital is a plant that needs constant watering. And so we'll certainly see more investments behind digital as they get more focused on data and more focused on, one-to-one marketing. Certainly there's an opportunity, I would say, to continue to invest behind this. And it's McDonald's. They're the biggest restaurant company in the world. Certainly you'll see them obviously make a pretty big mark here and obviously do things in a very unique way, just given their resources.
And for people who are wondering, obviously we've been focusing a lot on tech layoffs. It's a different though situation here for some of these restaurant brands.
Yeah, it's kind of apples and oranges when you compare it to tech. And so, I would just point to the fact that this is an opportunity that falls in line with the G&A efficiencies that they talked about earlier this year. Opportunity to move a little bit faster on the decision-making side. And certainly, as you mentioned earlier, the reinvestments they're going to be making into things like digital to help them grow as well, and store development for that matter too, is an opportunity to really accelerate the top line for them.
I also want to talk about Restaurant Brands International. They got an upgrade there to outperform, and the Cowen note saying putting the brand back together. Break that down for us.
Yeah, so we're really excited about Restaurant Brands. As you mentioned, we upgraded it on Friday, and what we're really excited about there is that the key investor focuses on Burger King US, despite the fact it's about 20% of the adjusted EBITDA of the company. And they're undergoing a turnaround there. It's been a long time coming, following years of underperformance from 2017 through 2022 for the brand. What gives us a lot of confidence about that is that they've got the U.S. president that came from Domino's back in 2021, that he's kind of put together the right team and the right playbook. And what's really exciting is really the oversight you're going to see from the new executive chairman, Patrick Doyle, who joined back in November, and just the home run track record that he had at Domino's during his time there as CEO from 2010 through 2018. And so we're really excited about just the opportunity, I would say, and just the right decision-making that's being put in place to really help fix the Burger King brand and the oversight that's brought, from the new CEO. And in terms of why now, certainly want to do this ahead of the quarter when we're pretty confident about Burger King US same-store sales, as well as Tim Hortons Canada same-store sales. That's the biggest piece of the puzzle at 45% of the adjusted EBITDA is that Tim Hortons Canada that's been executing very well and has momentum. And we think the top line there for those two brands will offset some of the cost pressures the business is currently going through.
And you did note that you're not acknowledging the risk of some choppiness in this turnaround story. What's giving you some concerns?
Yeah, so Burger King is obviously the second largest quick service hamburger brand, or now third after Wendy's, but we think they'll regain their second. McDonald's is obviously the 800-pound gorilla in the space. And what gives us some concern is just that McDonald's is firing all cylinders, and we cover McDonald's and think that performance will sustain. We think that Burger King can carve out its own niche. Right now, they're more focused on moving away from the discounts. That's helping them really grow their ticket and really help enhance their profitability. But we're going to see some stuff starting later this year on the fun side. And so what that means is you're going to see some new menu innovation around Whopper varieties. We wouldn't be surprised to see upgraded fries and frankly, just a new approach to brand management that's been neglected for the last 5+ years. We're also very excited about that Burger King will be introducing later this year. And so Look, there's a heavy lift going on right now as they take the underperforming stores and try to figure out what to do with them between closing them, between repurposing them to better performing franchisees. So certainly a lot of lifting there that's going to result in some messiness around potential for store closures, potential for franchise bankruptcies that might result in bad debt expense if we think about worst case scenario. But we account for this in our above consensus 23 through 24 estimates and really point to the exciting things they're doing at Burger King US to drive same store sales, as well as confidence for sustained performance and momentum at Tim's Canada, as well as Burger King International, which is more of a store development story.
And as we look at some of the themes that you think are going to be dominating the Q2 earnings season for restaurants, for the restaurant industry, what are going to be the standouts for you?
Yeah, so the key lesson I'd say exiting one Q earnings season, which only wrapped up a month ago, so it's like here we go again. But the key things I would say are that margins are in clear focus right now, and that historically it was all about sales. I will say the restaurant sales environment has held in very well. That the consumer's been pretty resilient here. That certainly the 8% pricing we're seeing in the industry, the highest in the last 40 years. That is something that you're certainly seeing some negative traffic, just given that there is some elasticity with that. But by and large, sales are holding in well, and we expect that to persist basically through the first quarter, especially with disclosure for sales that are off to a pretty good start, for January and for February. So margins are really in focus right now with just glacial improvement that we're seeing within food costs and within labor as well. And so what we're really focused on is just the improvement in margins, the ability for that to continue. And for stores that are able to focus that that are able to show that margin improvement and show top line driven beats, certainly I think you're going to see the stocks continue to be rewarded, as was the trend in the fourth quarter earnings season.
We'll certainly be keeping an eye on that heading into Q2. Andrew Charles there, thank you so much. Consumer Restaurants Managing Director at TD Cowen. Thank you so much.